Take a look at this. The party returns to Wall Street with all three of the major averages rallying big time today. The Dow climbing 401 points, even after yesterday's big 600-plus point sell-off. Everyone getting a big boost from big tech today, and we got some big news after the bell from Amazon and Alphabet, the parent of Google, both beating on earnings but missing on revenue. Here is where they are trading right now. You have Amazon down 7% and Alphabet down about 5%. So, guys, what do you make of more revenue misses this time coming from two big tech companies?
Well, I was glad to see a little bit of a bounce back today, Lauren, in the markets. But, this is a weak stock market. And you know what? Look at the results after the bell now. As you said, beats, but the stock's selling off. So now I want to be a bull here. And again, happy to see some kind of a bounce back. But so many new lows, so few new highs. I wonder if the old saying that one sparrow does not make a spring is appropriate here. Yeah. This is a sparrow, but I don't think it's a bull market.
Let me put it best. These two are big, gigantic bellwethers for the NASDAQ 100, the NASDAQ, and the market.
Amazon
and Google in a market that is already very weak, regardless of what happened today. This is not going to help markets tomorrow, regardless of what earnings are coming in the next week or two.
It's not going to help. Gary, it's not going to help markets tomorrow, but wouldn't you say the big bounce that we've had today, the bounce back we had in the markets after down 600 points in the Dow yesterday, isn't that a positive for the markets?
I don't think so, because I look at it as down 2,700 on the Dow, up 400. I just think this market has a lot to deal with. And as Jonathan said, this drop recently didn't come out of thin air. Half the market was already in bad shape before October. Foreign markets have basically been obliterated.
I think
this is something to watch.
I think everybody needs to note that today Amazon was up pretty significantly. So they were up almost 7% during the session, and now they're selling it off. And the problem was the revenue. Normally, Amazon is a revenue juggernaut. People don't really focus on their earnings because they consistently reinvest in their business. And when you look off of what happened yesterday with Microsoft doing exceptionally well, even in the cloud, their Azure cloud revenues were up 76%. That should have translated into Amazon doing exceptionally well in the cloud.
I'm with you, Kevin. It's on the revenue. It was a slight miss, but it was a miss, and it was the guidance. And it's all about a changing perspective. The guidance for Amazon's holiday quarter came in weak, and that is concerning many investors out there.
And, you're also talking about stocks that even with these moves down have still had, in some cases, 100% plus runs in just the last year. I mean, it's really been the high-tech stocks, as we've talked about this. It hasn't been Alcoa at a new 52-week low. It hasn't been, General Dynamics or IBM. Those stocks are at 52-week lows. It's been these FANGs. It's been these high-tech stocks. So,
we're so used to the FANGs have generated 37% annual
where
growth
the money's been
on
made.
average since 2014. And this year, it's like, okay, Netflix is up like 70%, and Amazon's still up 40-something%. But they're struggling heading into the key final quarter of the year.
The good news is they've had a monstrous run. The bad news is they've had a monstrous run because now they are over-owned, over-leveraged, and that's when trouble happens. And Amazon's going to open about 20% below the recent highs. That really affects the indices and also affects the psyche of a market that's been under pressure already. And that's the big worry as we move forward into the end of the year.
Heather, do you buy Amazon and Alphabet at these prices? Is the price right now for investors? I'm curious what you have to say about that.
I think you have to wait for investors to digest their earnings after hours right now. I know it's not a positive for the stock because they had revenue beats, but earnings were big blowouts for Amazon. And I do think that the holiday shopping season will be a positive. Consumer confidence is at 18-year highs. So the economy is still doing very well. Earnings across the board are still doing well. So I think I would wait, let investors digest some of these earnings from Google and Amazon. Let's see how it plays out tomorrow in the markets.
Here's the moral of the story. When you look at Amazon, 50% of their sales come from third-party distributors, meaning they're not having to worry about the cost of goods sold. They're actually just doing the fulfillment. When you look at the cloud, they're doing exceptionally well there. They had 80,000 customers bring on new databases for artificial intelligence. They're going to continue to grow and do exceptionally well.
But the stock,
so this leads to an opportunity.
We invest in the stocks themselves. I mean, I think of companies like Microsoft, like Cisco, which topped out in 2000 and basically didn't return to those levels for 13, 14, 15 years, even though the companies continue to make more money, and in many cases make more money.
Yeah, because that had to do with a valuation situation right now.
And Amazon is, I guess that was Lauren's question, though. You think Amazon is fairly priced?
Yeah, Amazon is fairly priced, because what you need to do is you need to focus on what they're doing with their revenues and then guidance. And listen, this gave an opportunity because their guidance, they always have a wide moat when it comes to their earnings, but on their guidance side for revenues, it wasn't a huge disappointment. I mean, the stock's selling off a little bit here, but they're going to continue to go over the next 3, 5, 10 years. I'm not necessarily worried about one quarter heading into the holidays where they're worried a little bit.
Yeah, well, they're also paying their employees $15 an hour in the backdrop